Hey traders, TG Watkins here. Last week I showed you how LEAPS work and about them and what you need to know about LEAPS versus just regular options and even versus stock. This week I told you I was going to actually show you some of the reasons why I think we are in a golden opportunity for the LEAPS strategy and what we can expect going forward in this kind of market. So let's dive in and see what we can find. All right, and if you guys remember, this is for educational purposes only. And then as far as the market goes, this is the reason why I'm talking about LEAPS, because I do believe that we are in a very good, strong, healthy market. Now, because LEAPS are longer term, that's what they are, usually a year or more, we're looking at longer term trends. If this was a bear market or choppy or indecisive, I wouldn't be talking about this strategy, because this is what we're trying to do, is find something that we can buy and actually have these things trend for months, hopefully. And if you look at something like SoFi, this is a monthly chart. It has been trending very well for quite some time, and I think that there's more opportunity to happen, especially in a lot of other stocks that are starting to show up out there. Now, I know SoFi, if we look here, is actually right at its previous high. So I think the whole market, as you guys are seeing the video today, is under a little bit of pressure. It's been sideways for all of August, and maybe we're going to come down a little bit September, but I think this is good. This is going to help kind of refresh some stuff and actually bring things back down so that we can find good opportunities to get into these longer term positions. But ever since we went through the 2022, 2021 bear market, the small caps like this have, as you can see here, have basically been dead. And then we started getting into 2024, and now we have 2025. And I think that the tariff tantrum lows really helped restart the market and get things going. And a couple other things I'll be talking about in the future in the next part of this presentation. But you can see we're doing really, really well with something like even SoFi. Now, while the market is resetting, like as I said, we're in September, we got some seasonal weakness. I don't know how bad it's going to be, but it does seem like the market's kind of calmed down a little bit. And while the market is resetting, this is the ideal time to find strong tickers, because you will see which ones have relative strength, meaning which ones are holding up while the market comes down, or which ones are just resting or bull flagging into support. That's the kind of stuff that we're going to be looking for. You're going to want to use monthly and weekly charts to identify long-term configurations, long-term setups. Now, I do actually have a class on this. You guys are going to be seeing this video later today. I have a class on this tomorrow. It's part of the 3-part bonus series that is in the Moxie trading room. So if you guys are interested to come in there, go to simplertrading.com/Moxie, and that's how you can come in. I'm going to do the class tomorrow, and I have all the 2 previous classes already recorded, and you guys can sign up for those and get them when you come into the Moxie trading room. So come on in, we're gonna be talking about this, and I'll be building that class for tomorrow. Okay, premiums are down while the market is calm. This is another thing when you trade options, whether it's short dated options or longer dated options, you want the IV, the implied volatility, to be down and contracted. That means you actually get a nice, good, low price, and then when things start to pick up again, it starts to inflate, and that'll help with your premium, which is good once you own it. But when you're trying to get in, you want things to be calm, so that's not working against you. And if August and September have been kind of calm or pulling back, you can be buying the dips. You can get these premiums to contract because things aren't going crazy right now. And that's a great time to start getting into some of these longer term positions, which is what we're looking for. All right, then if you come over here, I wanted to show you a few of the tickers that I'm looking at that I think have these really good longer term opportunities. I'm going to be diving in a lot more into detail tomorrow with that class. But RCAT, drone stock, hasn't even exploded yet. I still think that there's opportunity here. Grab, it has been going sideways for quite some time. I don't see a problem here. I think eventually they are going to come out with some news and some investment, and I think they're going to dominate out there in Southeast Asia. So I think I think Grab is going to be another good one. It kind of looks a lot like Palantir before Palantir really started going. So I do think that there's some opportunity here. Ethereum has had a really big move. Of course, everybody is now talking about it, which is great. We're good to know about that. And now it has broken out from previous all-time highs. It's kind of been in this range for a long time, and now it's up here. So this looks like it wants to make for a new great trend, which is what we're looking for. Do I want to buy it right here? Probably not. Let's wait for it to come down a little bit, maybe sideways. But it's hard to ignore that a stock like that, or Ethereum crypto, is up big like this. We should be paying attention to it. All right, so some of the tailwinds that are happening out here. This is why I think that 2025, even 2026, is probably going to be pretty good for us out there. Now, part of the things I'm looking at is this is a tech boom. Now, I know that there's been a lot of people talking about AI in kind of relation to the late 90s and kind of the dot-com bubble and all that kind of stuff. So like, are we in a bubble? I don't think we're in a bubble. I know Steve Altman has talked about that and said, yes, we're in a bubble. That's okay. That's fine. We can be in a bubble for a while. We don't know how long this bubble goes for if we are. Now, the other thing to kind of push back against this, as far as the bubble situation, is that when it came to the dot-com stuff and dot-com era and all that revolution, the internet, all that, the dot-com thing was like, oh, you have a website? Great. You're going to go up 100%. Oh, you're online now? Awesome. It was all about e-commerce. And if you had a website, you were doing great. But once people realized that basically all it was is, oh, you're just the regular old business now with a website, didn't make you special, and this was all kind of like a one-trick pony, then it started to come back down basically in the early 2000s. I think AI is going to be a little bit different because it's not just AI. It is this new technology that is going to seep into everything. This is why the companies are spending so much money, billions, on the data centers and on semiconductors and on computer chips and all that kind of stuff. There's a lot going on, and it's going to find its way into every little corner of our life, most likely. Crypto seems to keep going. Okay, Bitcoin is right back to where it used to be. It's doing great. And then on top of that, we're seeing Solana and we're seeing Ethereum, and we're now seeing how this can start to seep into finance because of tokenization and the revolution that this might occur. So crypto and finance could actually be kind of tied together because of these new rails of how we're going to be executing all of these transactions and whatnot. Semiconductors, of course, you can't build any of this without semiconductors, and so that's been a huge thing. When just look at NVIDIA, we know that. I don't think NVIDIA is done going up, so I think we're going to see higher. AMD is starting to really kind of spring back and do pretty well. So yeah, semis are here to stay. Robots, there's a lot involved with this. Okay, we know we have Tesla with Optimus. There's even the stock RR, which is now getting into some really big companies. Their stock just exploded 60%. It's faded a little bit, but it went up 60% on the news. And we're going to see a revolution in how these robots are, number one, in our lives, and also two, in our factories. Okay, so there's a lot there. We can even have self-driving cars, which could be considered robots in a way. And so all of these things are starting to happen. This is more than just, oh, I have a website for the dot-com boom, okay? We're also starting to see AI come into biotech, and the computer power that is starting to come into biotech. They are using AI to develop new molecules and drugs and prescriptions and modeling this stuff and cancer treatments and detection and AI imagery. It is crazy what is going on out there, and it's more than just people having a website. Okay, so that's why I think when it comes .com versus AI, it's hard to compare. I actually think that what we're doing right now is going to be more revolutionary than the .com situation, and I think it's going to be here to stay longer. Now, the other thing I have is the M2 money supply. Some people kind of talk about this a little bit out there, but basically, as long as the money supply is going up, well, there's more money in the world, and it has to find a home, and it usually finds its home in the stock market. Now, you can see when the money supply was going down, that is when we had the bear market of 21, 22. Okay, the Fed was trying to clamp down on things, and you could see they actually kind of slowed this thing down. Ever since, though, we've been going up. So if you want, kind of keep an eye on this, and you can see it's been doing well. Obviously, in 2020, money supply exploded, and the market just went crazy. So yeah, for the most part, keep an eye on that. It's doing well. All right, fiscal easing. This is another part of what's going on out there as far as the economy and the Fed. Like, remember, don't fight the Fed. And this is why I think that we're also seeing some more tailwinds, especially when it comes to the fiscal monetary environment out there. The Fed already cut rates in 2024. You can see that. We had quite a few. I think it was about 1% that we got cut. That's great. The market liked it, continued to go up. Fantastic. Now, the Fed, Jerome Powell, is getting ready to cut again in 2025, so we should see that kind of right about here. I think they are talking about the September meeting is where everybody's kind of planning for there to be a rate cut. So, now that doesn't mean as soon as they cut rates that the market's going to go up. We still have to kind of, get the market to get ready for it, but I think that is planned and anticipated, and that's what we should be anticipating next. And it seems as though the expectation is there are going to be a few more rate cuts, maybe one more in 2025, and then the rest would be in 2026. Tariffs. Of course, there's lots of debate about that. Tariffs are inflationary, tariffs are deflationary, tariffs are this, tariffs are that. I think that the idea of tariffs as a wall of worry, because remember, if you guys ever heard of that phrase, the market likes to climb a wall of worry. Because if everybody were bullish, then we get something like 2022 and the market just goes crazy and then it's a problem. But if you have enough people that are bullish and enough people are bearish, everybody has their own opinion, and that's what makes a market, and that is actually what kind of helps keep the market going up, because every time you get people who are bearish and they want the market to go down, whenever they're wrong, they have to buy back, and that'll help keep the market going up a little bit more. So we do need this two-sided market in order to kind of keep things grinding higher, and then also provide those opportunities for the dips that can get bought. So I personally think tariffs are going to be a wall of worry. Inflation, I don't think it's going to be a problem. I really don't. I know we had a hot PPI. Let's see where this goes and what happens. It, as I said, might be transitory. It's kind of a bad word, but we'll see. I think that in a way, tariffs might actually be stifling a little bit, and that might actually work against inflation, which I think would be a good thing. So let's kind of see. We'll see if that idea is correct. I know everybody has their own opinion, so we'll just kind of leave that one out there. And then money out of the bond market. Since they are going to start cutting rates, those investors who are in the bond market are starting to look like, where else can I make money? Because now their vehicle is not going to be making as much money as it once was, and the stock market continues to make new all-time highs. So where do you think they're going to want to go? They're going to want to be pulling their money out of the bond market and probably go into equities, get a little bit more exposure, since bonds interest rates are going to be coming down, and they don't want to be there. Okay, so whether it be gold, which is doing great, silver, precious metals, commodities, the stock market, generally speaking, I would see that there could be a lot of money coming out of the bond market. Okay, so as I said, remember this Thursday that there is going to be the third and final class that I'm going to be teaching about long-term Moxie setups, monthly, weekly stuff. Now, before you get going, because I know you think this is an advertisement, I'm going to jump over and show weekly SPX chart, because I want you to see kind of where we're at and why I think that the market could continue higher, even though some people think we're in a bubble or we're too hot, we're overcooked, all that kind of stuff. I don't think we are, but I want to make sure that you guys know that we're having this next live class, the third installment, 3:30 p.m. Central Time, Thursday. Come sign up. It's September 4th. And if you guys are late, like if you missed this, if you're seeing this recording after the fact, you can always sign up. These things are recorded, and then you can still get it once you sign up. Okay, simplertrading.com/Moxie. All right, let's dive into some live charts. And what I wanted to show you here, this is the SPX weekly. And let's see if I get the right cursor. If we kind of zoom in on a few things, we know that we had a pretty big 20% correction, very, very fast, 20% correction based on the tariff tantrums. And I think that is what helped spur this next round of a bull market, okay? This was obviously the bear market of 2022 or so, and that then helped get things going. And we were getting a little frothy. I remember coming into the end of 24 and being like, this market's up pretty high. I don't know how much further we can go without some sort of refresh or reset. And little did I know that it was going to be the whole tariff tantrum thing that actually reset the market. And now look at this. It was like a springboard to get the market higher. So yes, I think that we are looking pretty darn good. And if you just look, now this was COVID, of course, special situations, but same thing. We saw a huge dip, we saw it break out, and then it carried for a while. So that was really, really nice. And then if we come over here, we don't really have anything structurally weak out there. We don't really have a lot going on right now that's problematic. And you can see that just every time we get these dips and an uptrend, we're looking actually pretty good. And I think that's what we're doing, is we are recovering from the 2022 bull or bear market. And so we had 2008, then we had 2000. Now they were huge, I get it, but if you kind of zoom out and you look at where we are here, we've had a few things that really helped reset some stuff. We had 2015, which helped reset it. We had a pullback in 2019, we had COVID, we had a bear market, and now we had another 20% thing. So even though it seems like the market's kind of been up nonstop, it really hasn't. There have been a lot of things that have actually reset the market, and gotten us back to higher highs. And if we kind of zoom out over here and we look at even the dot-com thing into the late 90s, I know some people are kind of arguing that maybe we're in the last stages of this. Fine. Even if this lasts only 2 more years, maybe we're right here. Maybe. This was 1998, and the dot-com bubble popped in 2000. So let's just say we had 2 more years. Here's a pretty big dip that the market experienced in 1998. And you can see here, it broke out to new highs, kind of pulled back a little bit. And you can see here, yes, there was another dip, but it kept going for a while. And it was only here that it finally started to break down. So what I'm trying to show you is I don't think we are anywhere near this market actually breaking down and rolling over to the downside. I think we're in a good, strong bull market. I think this is a great opportunity for longer term trades like the leaps that I was showing you. And that's why I want you guys to make sure that you come over here and have a great time when we start looking at something like this. So come on over. I'm going to be teaching the class about these long-term trades that I show you. And yeah, come enjoy. So we'll see you guys there. You guys take care. Thanks.